As of August 3, 2026, regular trading hours are currently closed, with Ondas Inc. trading under ticker symbol ONDS on the Nasdaq, having closed its most recent trading session at $7.49 per share, reflecting an active daily range between $6.84 and $7.65 on elevated volume. If you have been monitoring retail trading feeds on Robinhood or tracking institutional flow on Interactive Brokers, you have likely seen this ticker light up message boards. The prevailing narrative across major online investing forums paints Ondas Inc. as just another speculative microcap defense proxy riding the coattails of elevated geopolitical chatter, a high beta ticker prone to wild swings without the underlying financial bedrock to sustain its valuation. Retail traders often lump it in with volatile penny stocks, while risk-averse wealth managers on platforms like Schwab Intelligent Portfolios or Fidelity Wealth Management frequently overlook it in favor of mega-cap tech staples like Tesla stock, Apple stock, or Nvidia stock. The underlying reality on the ground tells a radically different story, one that Wall Street algorithms and headline skim readers are only now beginning to price in properly. Behind the surface-level volatility lies a company executing a massive consolidation strategy across autonomous defense, counter-drone systems, and private industrial communication networks. While mainstream commentators debate whether small-cap growth tech can survive higher for longer interest rates, Ondas has quietly amassed over $70 million in brand-new defense and security orders, secured a major contract with the U.S. Navy Southcom for stratospheric maritime domain awareness, and engineered a transformer-level transaction by agreeing to acquire autonomous aircraft developer DZY Technologies in a massive cash and stock deal. The expectation was a struggling speculative firm burning cash on niche tech. The reality is an emerging defense technology prime building an integrated physical AI ecosystem. To understand why this gap between expectation and reality offers such compelling insight, we have to examine the aggressive daily trading volume and institutional repositioning unfolding across major brokerages. In recent trading sessions, Ondas Inc. has seen trading volume eclipse 59 million shares per day, swinging well above its historical baselines as institutional order flow collides with retail momentum. Investors using self-investing strategies through a Fidelity brokerage account or Interactive Brokers platform have watched the stock swing dramatically across a 52-week range spanning from $1.85 all the way up to $15.28. This volatility is not random noise. It represents a fierce battle between legacy short sellers who treated Ondas as an unprofitable software-defined radio play and forward-looking institutional funds using Fidelity mutual funds and individual brokerage accounts to build positions in what could become a dominant player in physical artificial intelligence. The institutional flow data reveals a fascinating dynamic. Active managers utilizing Interactive Brokers trading setups and sophisticated algorithmic execution suites are accumulating shares during periods of retail capitulation. When general market sentiment dips, casual retail traders on the Robinhood app often panic sell growth names to chase large cap stability. Yet Wall Street consensus price targets on Ondas currently sit near $19.81 per share, suggesting an upside potential that starkly contrasts with present trading levels around $7.49. Analysts tracking the stock are recognizing that the company's recent operational trajectory represents a structural break from its historical past. Looking closely at the recent price action, every earnings reaction and news release has served as a catalyst for massive turnover. With the company scheduled to report its second quarter 2026 financial results on August 13, 2026, market participants across SoFi Invest, SoFi Active Investing, and Robinhood stock trading are positioning themselves ahead of what could be a decisive report. Over the past 9 consecutive quarters, top-line revenue trajectories have expanded dramatically, expanding from under $1 million into tens of millions per quarter, driven by rapid customer adoption of both autonomous aerial assets and ground-based countermeasure infrastructure. At this stage of the analysis, I want to hear directly from you. Comment below how many shares of Ondas Inc. you currently hold in your individual brokerage account, or let me know if you believe autonomous defense platforms will outperform traditional defense prime contractors over the next 3 years. Your input helps gauge where real retail sentiment lies compared to institutional positioning. To fully understand how Ondas Inc. reached this inflection point, we need to examine its core operating structure and underlying business model. Originally incorporated in 2014 and operating out of West Palm Beach, Florida, the company built its initial foundation around 2 distinct operating segments, Ondas Networks and Ondas Autonomous Systems. The Ondas Networks side of the house developed FullMax, a patented software-defined radio platform designed to build secure, private, wide-area wireless broadband networks. This technology was engineered specifically for mission-critical industrial applications, allowing Class 1 freight railroads, electric utility grids, oil and gas operators, and public safety agencies to transmit real-time data across vast geographic distances without relying on commercial cellular networks. However, the real accelerator for the company came through the expansion of its Ondas Autonomous Systems segment. Recognizing that secure communications are only half the battle, the company aggressively expanded into fully automated drone ecosystems and counter-unmanned aircraft systems. Their flagship Optimus system provides an automated drone-in-a-box data solution capable of continuous aerial surveillance, facility inspection, and perimeter security without human pilots on site. Simultaneously, their Iron Drone Raider and Sentry CS platforms established a presence in defense and homeland security, offering autonomous interceptor drones that neutralize hostile airborne threats alongside radio frequency tracking systems designed to safeguard sensitive border installations and public infrastructure. This dual focus on mission-critical wireless networks and autonomous robotics created the framework for their recent multi-hundred-million-dollar expansion strategy. By integrating WorldView's stratospheric high-altitude balloons into their portfolio, Ondas expanded its reach from ground-level radio towers all the way up to the stratosphere. The U.S. Navy Southcom Division selected WorldView for a maritime domain awareness contract across the Eastern Pacific and Caribbean, utilizing persistent high-altitude surveillance to track illicit trafficking and illegal fishing operations. Furthermore, the $875 million transaction for DZY Technologies adds long-endurance autonomous aircraft systems directly into Ondas's inventory, positioning them as a comprehensive defense architecture provider. For investors seeking investment help or evaluating where to invest online, comparing Ondas to conventional technology firms requires a shift in analytical perspective. When evaluating an intelligent portfolio on SoFi Invest or constructing a self-directed basket on Interactive Brokers, standard price-to-earnings metrics often obscure early-stage defense tech transitions. Historically, Ondas operated with significant cash burn as it funded heavy R&D while waiting for long government procurement cycles to turn into signed purchase orders. That lag period created the negative earnings history that short sellers highlighted for years. Yet the expectation of perpetual cash drain is now running directly into the reality of broad-based order acceleration. The recent $70 million influx of new contract awards spans ground systems, border security, aerial intelligence, and precision strike platforms. When a company transforms from selling standalone radio hardware into providing integrated defense systems, its revenue profile converts from lumpy, low-margin equipment sales into high-margin recurring software and maintenance agreements. This operational leverage is precisely why institutional investors using Fidelity trading platforms and Robinhood investments are paying such close attention to the upcoming August 13th earnings report. Looking forward into the second half of 2026 and beyond, several distinct catalysts and structural risks will determine whether Ondas Inc. can sustain its momentum toward analyst price targets. On the catalyst side, global demand for autonomous counter-drone defense is expanding at an unprecedented rate. Modern conflict zones and international security requirements have demonstrated that low-cost drone threats render traditional air defense systems economically unsustainable. Ondas's Iron Drone Raider and Sentry CS platforms provide a cost-effective countermeasure, placing the company directly in line for expanded defense procurement budgets across NATO allies and domestic government agencies. Furthermore, the rollout of physical AI across critical infrastructure represents a long-term commercial opportunity. During major public events such as the recent international sporting matches hosted at MetLife Stadium, automated aerial security and real-time perimeter monitoring proved